Right. So, AI is really hot right now.
It is.
And a lot of people are trying to figure out how to invest in it. But picking stocks,
Right.
is really hard, especially in like a game and kind of volatile field.
Yeah.
And
Absolutely.
so we found this article from the Motley Fool
Okay.
called The Best Index ETF to Invest $1,000 in right now.
Interesting.
And it's all about this ETF called QQQ.
Okay.
It's the Invesco Nasdaq 100 ETF.
Mm-hmm.
And they think it's like the best way to play AI.
So what makes them so confident?
Well, they lay out a lot of data, and we're going to like dive into all that
Okay.
and really see if this is,
Yeah.
worth the hype.
Mm-hmm.
But one thing I thought was interesting is right off the bat,
Yeah.
they're like, look, picking individual stocks is hard.
Mm-hmm.
They say that like only 15% of professional fund managers
Oh, wow.
actually beat the S&P 500 over a 10-year period.
Really? 15%?
Yeah, pretty low, right?
That's rough.
What do you think about?
Yeah, because those are supposed to be the pros.
I know they have like all these resources,
Exactly.
teams of analysts.
Yeah, and they still can't.
They still can't beat it consistently.
Oh.
And it gets even worse.
Oh, no.
So there was this study from JP Morgan,
Okay.
and they were looking at stocks in the Russell 3000 index,
Mm-hmm.
which is a pretty broad index.
Yeah.
And they found that like 40% of those companies
Whoa.
had losses of 70% or more
Oof.
and never recovered.
That's a lot.
I know. So,
Almost half?
yeah, essentially
Oh.
wiped out, a huge chunk of their investors' money and never came back.
Yeah, if you're unlucky enough to pick one of those,
Exactly.
yeah, you're in trouble.
So that kind of sets the stage, right? Like,
It does.
if it's so hard to pick individual stocks,
Mm-hmm.
what are we supposed to do?
What's the alternative?
Well, that's where QQQ comes in. So
Okay.
QQQ key tracks the Nasdaq 100 index,
Mm-hmm.
which is, known for being
Tech heavy?
more tech-heavy, more growth-oriented
Yeah.
than like the S&P 500.
Right. So already more potential for those high returns that we're looking for.
Exactly. And this is where the AI connection gets really interesting.
I was going to say, how does AI fit into all this?
So almost 60% of QQQ's holdings are in tech companies.
Okay.
And then another 20% are in consumer discretionary stocks.
Right. But even a lot of those are pretty tech heavy these days.
Yeah, like Amazon's in there,
Mhm.
Tesla.
Makes sense.
So, it's really...
It's heavily weighted towards that sector.
Exactly. So it's like they're saying, if you want to play AI,
Circle.
this is it.
Okay. Interesting.
And they even quote Amazon
Oh, really?
in the article. And Amazon's describing AI as,
Of course they are.
Yeah.
They're all in.
they call it a once-in-a-lifetime business opportunity.
Whoa.
And the biggest technological shift since the internet.
Big words.
Big words.
Do they think it's even bigger than the internet?
That's what it sounds like.
That's a bold statement.
It is. It
Yeah.
is.
So are they just buying into the hype, or is there actually something to this?
That's what we're here to figure out.
Okay, let's dig in then.
Yeah, so let's look at
Mhm.
like what actually makes up QQQ.
Yeah, like what companies are we actually talking about here?
So the top 10 holdings as of the end of last year,
Okay.
this is 2024,
Right.
were Apple,
No surprise there.
NVIDIA,
Yeah.
Microsoft,
Mhm.
Amazon,
Obviously.
Alphabet,
Yeah.
Broadcom,
Okay.
Meta Platforms,
Interesting.
Tesla,
Costco.
Costco,
Yeah.
huh,
Didn't expect that one.
and Netflix.
Okay, so it's not all
Yeah.
strictly tech.
But, a lot of those, even the ones that aren't like strictly tech companies,
Yeah, they all have a huge tech component.
yeah, they're
Yeah.
all involved in AI in some way.
Right.
And these top 10 holdings alone make up over 50% of QQQ's portfolio.
That's a lot of concentration.
It is, and that's something
Yeah, I was going to say.
we're going to talk about a little bit later.
Yeah.
Is that a good thing?
Right. Is all your eggs in one basket, or is it
Right.
good to be really focused?
Yeah, so, Motley Fool's painting a pretty rosy picture here.
They are.
But we need to,
Yeah,
look at the other side of the coin, too.
absolutely. Like, what if tech underperforms?
Yeah, exactly.
Well, what if, one of these big companies, takes a hit?
What if Apple has another
Antenna gate.
antenna gate? Yeah,
That really hurt them back in the day.
I know. So, QQQ could be really vulnerable
Yeah, that's a good point.
if things don't go perfectly.
So it's not a sure thing.
No investment is.
Yeah, but I guess the question is the potential reward worth that risk?
Exactly.
And to figure that out, I guess we need to look at how it's actually performed, right?
Yeah, let's look at the historical data.
Let's see what the numbers say.
Okay, so since its inception in 1999,
Okay.
QQQ has delivered a whopping 443.4% return,
Wow.
above and beyond what the S&P 500 achieved.
That's like almost 5 times the S&P's performance.
It is, yeah.
That's huge.
It's a big difference.
Yeah.
So what drove that? Was it just tech, or were there other things going on?
Well, I mean, the Nasdaq has always been kind of tilted towards those growth companies,
Right.
especially tech.
Mm-hmm.
So that probably played a big role. But,
We always have to remember.
past performance
Yeah.
doesn't guarantee future results.
Exactly.
That's the classic disclaimer,
But it's
right?
tempting
It is
to see those numbers and be like,
Yeah, sign me up.
yeah, I'm in.
But let's break it down a bit more.
Okay.
See if there's more to the story.
Yeah.
So over the past decade, QQQ is up by 459%.
Okay.
Compared to the S&P 500's, more modest 263%.
Still pretty good, though, for the S&P.
Yeah, not bad.
For just doing nothing.
Yeah, just riding the market. But
Exactly.
QQQ, that's an average annual return of 18.8%.
Wow, that's
While the S&P averaged 15.2% a year.
a big difference.
Yeah, it is.
All pounding over time.
It really adds up. And even just over the past 5 years,
Mm-hmm.
the difference is noticeable.
Okay.
146.2% for QQQ, averaging out to 19.8% for a year.
Wow.
Versus 102.6% and 15.2% for the S&P.
So it's consistently beating it
It is.
by a decent margin.
Pretty consistently.
Yeah, but again,
Past performance, asterisks.
yeah, we gotta keep that in mind.
We can't just assume it's going to keep going up like that forever.
Right, but how do we know
Yeah.
if it's likely to continue or not?
That's a tough question.
Yeah.
Well, one way to look at it is what's called rolling 12-month returns.
Okay.
So imagine we're looking at QQQ's performance every single day for the past 5 years.
Okay.
And each time we calculate how it did over the previous 12 months.
Mm-hmm.
So it's like a continuous evaluation.
Okay.
And what's interesting is that QQQ beat the S&P 500 in the vast majority of those snapshots.
Really?
Yeah, like 84% of the time over the past 5 years and
Okay.
87% over the past decade.
So it's not just like a one-time thing.
No, it's pretty consistent.
Or that's a lucky streak.
Yeah, exactly.
Exactly.
It's a pattern or a trend.
Okay, so that definitely led some credibility to the
Okay.
Motley Fool's argument.
Yeah.
But
But,
even with this historical data,
yeah.
could it be that QQQ is just like overpriced right now?
That's a good question.
Should people wait for a dip
Yeah, should we wait for a crash?
before they jump in?
That's always the dilemma, isn't it?
Yes.
Well, the Motley Fool makes this point about bull markets tending to last longer than bear markets.
Okay.
So if you're waiting for a crash,
You might miss out.
you might miss out on a lot of gains.
Right.
But on the other hand, if you buy in when it's really high
Yeah,
and then it crashes, you could lose a lot.
that's true.
So it's a tough call.
Yeah, it's like
There's no easy answer.
there's no crystal ball.
No.
But before we get ahead of ourselves,
Yeah.
let's talk about like what Motley Fool actually recommends in terms of strategy.
Yeah. How do they say we should approach this?
Yeah, like should we be running out tomorrow morning?
Yeah. Buying all the QQQ we can get our hands on.
Like putting all our money in?
Right.
Well, not so fast.
Okay.
They emphasize this idea of
Dollar cost average.
yeah.
Okay.
So instead of trying to time the market,
Which is impossible.
which is basically impossible,
Too much.
you invest a fixed amount of money
Okay.
at regular intervals.
So like every month,
Yeah, every month, every week.
every paycheck.
So put a little
Put in.
Yeah, consistently. And you do that regardless of whether the market's up or down.
Whether it's booming or crashing.
Yeah.
Just keep buying.
Keep buying.
Okay, that makes sense.
So it's like you're taking the emotion out of it.
Yeah, you're not panicking when it drops.
Yeah.
You're not getting greedy when it goes up.
Exactly.
You're just sticking to the plan.
Yeah.
Okay, I like that.
And by doing that,
Yeah.
you're essentially buying more shares when the prices are lower
Right.
and fewer shares when the prices are higher.
Which averages out your cost over time.
Exactly.
Okay.
So it smoothed out those bumps.
Yeah, it's a smoother ride.
Yeah. It's less stressful.
That's appealing.
Yeah. And hopefully
Yeah.
leads to better returns over the long run.
Makes sense.
But, we've been talking a lot about QQQ's returns,
Yeah,
and those are impressive numbers.
they are. But they're just numbers.
Yeah, like what do they actually mean?
Right, what does it actually represent?
Yeah, like what does it mean to invest in QQQ?
Yeah, like what are we really buying into here?
From a broader perspective, like
Mhm.
what's the bigger picture?
That's a good question.
Because it's not just about chasing returns.
No, it's about...
It's about being part of something bigger.
Yeah, like participating in the evolution of technology.
Yeah, and potentially shaping the future.
Exactly.
That's power.
It is. So investing in QQQ isn't just about, making money.
Yeah.
It's about supporting these companies that are driving innovation,
Mhm.
pushing the boundaries of
Yeah.
what's possible.
Like they're literally changing the world
Exactly.
with the things that they're doing.
And you can be a part of that.
You can be a part of that.
By investing in QQQ.
Yeah,
That's a cool way to think about it.
it is.
It's not just about numbers on a spreadsheet.
No.
It's about, the future.
Yeah.
The future of
An
technology.
amazing vision of the future.
Exactly.
And that's something we're going to talk about
Okay.
in the next part of our deep dive.
I'm excited to hear more.
Is like, what does that future actually look like?
Yeah, what are the implications?
Yeah, what are the implications of investing in QQQ and the future that it represents?
That's a big question.
It is. So stay tuned for that.
Okay, I will.
So we were talking about this idea that investing in QQQ isn't just about the potential profits.
Right.
It's about like aligning yourself with a vision of the future.
Exactly.
But what does that actually look like?
Well, I think it starts with recognizing the power of technology, particularly AI, and understanding its potential impact on like all these different sectors of the economy.
And Motley Fool even quotes Amazon in the article talking about how big AI is.
Right. Amazon's all over AI.
They're calling it a once-in-a-lifetime business opportunity.
Wow.
And the biggest technological shift since the internet.
That's a big claim.
Yeah, so what does that actually mean?
Well, I mean, think about the industries that are already being disrupted by AI, like healthcare, finance, manufacturing, transportation. Like practically every sector is being touched by this technology in some way.
And it's not always a bad thing.
No, not at all.
It can lead to like increased efficiency,
right,
new products and services,
yeah,
and potentially even like solutions to some of the world's biggest problems.
Exactly. Like take healthcare, for example.
Okay.
AI is being used to develop new diagnostic tools, personalized treatments, even accelerate drug discovery.
Wow.
And in finance, it's streamlining processes, managing risks, helping investors make more informed decisions.
So how does all of this tie back to QQQ?
Well, by investing in QQQ, you're essentially betting on the companies that are leading this charge. These are the companies that are developing the AI tools, the platforms, the applications that are driving these changes.
So it's not just buying into the hype. It's about understanding the tangible ways in which these companies are shaping the future.
Exactly. And while there are certainly risks involved,
of course,
as with any investment, the potential rewards are significant.
If
AI really does live up to its promise, the companies that are leading the way stand to benefit immensely.
That brings up an interesting point.
Yeah.
If this technological transformation is as big as everyone says it is, where else might we see these kinds of opportunities emerge?
Right, like what other sectors are poised for this kind of growth?
Yeah, what should we be looking at?
Well, we can't predict the future with certainty.
Right.
But we can look for clues. Think about the areas where AI is likely to have the biggest impact.
So we talk about healthcare, finance.
Yeah.
What about something like renewable energy?
Yeah, that's a good one.
Smart cities.
Absolutely.
Personalized education.
That's another area with huge potential.
It seems like there's a lot to be excited about.
There is. It's a really exciting time to be an investor.
And it's not just about picking stocks or chasing returns.
No.
It's about understanding the bigger picture.
Right.
And aligning your investments with those forces that are shaping the future.
Exactly.
So how can investors stay ahead of the curve?
Well, it's crucial to stay informed.
Okay.
Read industry publications, follow thought leaders, attend conferences.
Okay.
But it's also about developing a critical eye, learning to separate the hype from the substance.
Right, because not everything's going to be a winner.
Exactly. There will be winners and losers, as with any technological revolution.
So do your research.
Yeah.
Understand the underlying trends. And be willing to adapt as things change.
It's all about being flexible.
Okay, so we've explored the potential of AI.
Yeah.
The connection to QQQ. The importance of staying informed and adaptable.
Absolutely.
But let's bring it back to QQQ for a minute.
Okay.
Motley Fool's making a pretty strong case.
They are.
But are there any downsides?
Well, we've already talked about the concentration risk.
Right, all those eggs in one basket.
Yeah, that's definitely something to consider.
But are there other things we should be thinking about?
Yeah, I mean, one concern is that the tech sector can be more volatile than the broader market.
Right, especially those high-growth companies.
Exactly. They're more susceptible to economic downturns, changes in investor sentiment. Even geopolitical events.
So the potential upside is high?
Yeah.
But the potential downside is also higher.
That's the trade-off.
Compared to something like the S&P 500.
Right, which is more diversified.
Exactly.
And it's also important to remember that the tech landscape is constantly changing.
Right.
What's hot today might be obsolete tomorrow.
That's a scary thought.
It is, but it's the reality.
So how can investors mitigate that risk?
Well, again, it comes back to staying informed, keeping an eye on emerging trends, new technologies, potential disruptors. Don't be afraid to reevaluate your investments and make adjustments.
So it's not a set it and forget it kind of thing.
No, you have to actively involve.
I've got to stay engaged.
Exactly.
So it sounds like there's no easy answer.
There isn't.
But if you're willing to put in the work,
Yeah.
The potential rewards are there.
They are, absolutely.
Okay, so we've talked about the potential of AI, the connection to QQQ,
Right.
the importance of staying informed
Yeah.
and adaptable. But before we wrap up this deep dive,
Yeah.
I have one more question.
Okay.
Motley Fool really emphasizes the importance of a long-term mindset.
Yes, they do.
Especially with a growth-oriented ETF like QQQ.
Right. Why do you think that is?
Yet why is that so crucial in this case?
Well, because investing in technology,
And
and especially in a field like AI, it's about betting on the future.
okay.
It's about understanding that the true potential of these technologies
Yeah.
might not be fully realized for years,
Right.
even decades to come.
So patience is key.
It is.
We can't expect to get rich quick.
No, it's a long game.
Okay.
It's about trusting the process,
Mm-hmm.
staying the course,
Yeah,
and weathering the inevitable ups and downs.
right, because there will be ups and downs.
Oh,
It's
absolutely.
not going to be a straight line up.
No, it's going to be a roller coaster.
But that's where a solid investment strategy,
Right.
like dollar cost averaging,
Exactly.
can really help.
Yeah, it takes the emotion out of it.
You're not making those impulsive decisions
Right.
based on short-term fear or greed.
It's a more disciplined approach.
Exactly.
And it allows you to benefit from those ups and downs.
Buying more when the price is low and
Yes.
fewer when it's high.
That's the key.
So it's really about taking a long-term view,
Yeah.
trusting in the power of compound growth,
Mm-hmm.
and letting time work its magic.
Exactly.
So we've covered a lot of ground here.
we have
AI, QQQ, long-term thinking.
future.
But for our listener, tuning in,
Yeah.
what are the,
The key takeaway.
big things they should walk away with?
I think the first one is just that, investing is hard.
Yep.
Picking individual stocks.
Hoping to get lucky.
Yeah, trying to find the next big thing.
It's statistically really tough.
It is. We saw that even the professionals, they struggle to beat the market.
15%.
Yeah, it's a dismal success rate.
So that's where these ETFs, like QQQ,
Yeah,
they become appealing?
they do.
Because it's like pre-built diversification.
Right.
Getting exposure to,
A whole basket
a whole sector.
without having to pick and choose.
Tech in this case.
Yeah, heavily influenced by AI.
And Motley Fool's argument is that this sector, with AI powering it,
It's going to be
it's going to drive growth for
years to come.
years to come.
And QQQs is a way to tap into that.
Ride that wave.
Exactly.
But they're also careful to say,
What to be smart about?
yeah, like don't just go all in.
No.
You got to be disciplined.
That's where that dollar cost averaging comes in.
Yeah, that regular investing,
Rain or shine.
no matter what the market's doing.
Up, down, sideways.
Just keep buying.
Exactly. It takes the emotion out of it.
And they make a good point about
Yeah.
the downside of waiting for a crash.
Yeah, you could be waiting a long time.
Because bull markets.
They tend to run long.
And you could miss out on all those gains
Sitting on the sideline.
just, waiting for the bottom.
Exactly.
So it's a balance.
It is.
Oh.
But QQQ.
It's past performance.
Yeah, and that focus on this high growth area.
It makes it something to consider.
It definitely does.
But as always,
yeah,
do your own research.
absolutely.
Talk to a financial advisor if you need to.
Good advice.
And make sure any investment you make aligns with your goals,
And your risk tolerance.
your risk tolerance.
Everyone's different.
It's a personal journey.
It is.
All right, so I think we've reached the bottom of this deep dive.
I think so.
We went from the general challenges of investing.
Yeah.
We zoomed in on QQQ,
Explored the numbers.
explored what it all means.
There's a picture.
More than just numbers on a spreadsheet.
The fish.
A vision of the future.
It's exciting stuff.
And for our listener, we hope this deep dive has given you some food for thought
Yeah, some things to think about.
as you navigate this crazy world of investing.
It's a wild ride.
It is. Until next time,
See you then.
keep those brains buzzing and happy investing.
Yeah.